Hello and welcome. You're watching Business Plus. The RBI governor today said that there is no major issue with withdrawal of 2,000 rupee note, and also there are no crowds to be seen at the banks. Speaking at an event organized by CII, RBI governor said that retail inflation is well below the estimate. It has moderated, but there is also no room for complacency at all. The next inflation print is expected to be lower than 4.7%, and inflation based on consumer price index, remember, came at 4.7% in April this year. Thus, also said that India's GDP growth rate could surpass 7% in financial year 2023. All that and more in that event that was organized by CII. Listen into what RBI governor had to say.
As all of you are aware, and as all of us are aware, the global economy is facing headwinds from the lingering geopolitical conflict, elevated inflationary pressures from across countries, and tighter financial conditions on the back of monetary policy tightening by major central banks across the world. The IMF's World Economic Outlook of April 2023 projects global growth to decelerate from 3.4% in 2022 to 2.8% in 23, before rising again to 3% in 2024. The economic slowdown is, however, concentrated in advanced economies, with Asia-Pacific region expected to contribute about 70% of global growth in 2023. And according to the same estimates, India will contribute about 15% to global growth in the current year. Financial markets remain volatile as uncertainty over future monetary policy path is keeping market sentiments on the edge.
That's RBI Governor Shaktikanta Das there saying that inflation is well within control. Financial markets internationally will remain volatile, but India is on a steady path. Shifting focus now, Moody's has predicted that India's GDP, in fact, in 2022 said that it crossed 3.5 trillion US dollars and will continue to be fastest growing G20 economy in the years to come. Now, infrastructure, manufacturing sector will push India's growth story, will make it the fastest growing economy over the next few years. Also raising red flags over the pace of reforms and policy barriers that could hamper development and investment opportunities in years to come. In its research report, the US-based rating agency said that bureaucracy could slow the approval process in obtaining license and setting up of businesses, prolonging the gestation period. And it also said, and I'm quoting at this point in time, that India's higher bureaucracy in decision making will reduce its attractiveness as a destination for foreign direct investment. Very interesting points coming in there from Moody's at this point in time. Joining me is Yuvika Singhal from Quantico. Also with us is Subhomoy Bhattacharjee, who's a senior journalist. I want to come to you first, Yuvika. What do you make of these interesting takeaways from the report by Moody's?
Hi, Shweta. Thank you for having me. I think Moody's somewhere is putting out a very balanced, or if I could say, a mixed kind of a takeaway for us. So on one hand, they do sound more positive about India and India's growth story. On the other hand, they also talk about some of the factors that could play or as laggards on India's growth story. And these are some of the factors from a policy perspective that we are aware of. But having said so, I think we need to also be mindful of the fact that over the last few years, a lot has been done on the policy front. And India, for the matter, has emerged as one of the most stable economic policy offering one of the most stable economic policies globally. And this has come about with a host of reforms, not just from the government, but also from the RBI. To jog your memory, we have seen in the last few years, RBI emerged as an inflation targeting band, establishing its credibility to control inflation. On the government side, also, we have seen a lot of predictability, new policies such as PLI, measures to ease businesses and the way of doing business in India. There has been a lot of push towards rule-based policy and rule-based institutions vis-a-vis ad hocness that was somewhat expected of India almost a decade ago. And I think even in times of adversities, when we have seen last 2 years being, taken away by the pandemic and the uncertainty it caused, I think India worked relentlessly to push through some of its policy reforms, and we did not fall flat on those, despite a lot of uncertainty, both in the domestic and the global economy. So while I think we need to take it with some bit of a pinch of salt, that yes, there are bigger and greater milestones that India is yet to achieve, but not also negate or downplay what we have already achieved. And there's a lot of ground that, as Indian economy, we have achieved in the last few years. We are one of the fastest growing economies in the world. We offer a very stable macroeconomic environment, a young population, a huge domestic consumption market. So these are all structural strengths that remain in India's favor as a key destination as far as attracting investments is concerned. So I think we need to draw a more balanced view.
Right, and I think that's what Moody's has done, drawn a very balanced view. Let me get in Subhomoy at this point in time. Subhomoy, interesting updates coming in there. As we read more into Moody's report, as Yuvika pointed out, it appears that there is a balancing act here. On one hand, betting big on India's infrastructure manufacturing sector, Moody's says that this will in fact push India's growth story. But at the same time, red tapeism, bureaucracy could hold us back.
Yeah, certainly. I mean, there's nothing particularly new there. The reason I say so is because let's look at what as Yuvika pointed out, the growth momentum is that's continuing. So I'll just come to that in a minute, but let's look at the more interesting thing, which is the bureaucracy issue. I think Moody's is getting it wrong in looking at higher bureaucracy. I'm one of those guys who strongly believes that bureaucracy is a problem. But the problem is not at the central government level. The problem is at the state level. Now, why does that happen? The reason is most FDI, when it gets cleared, when it comes to India, it has to find a place in a state where it will be set up. Now, let's take the example of the Ratnagiri refinery complex. The central government's in principle approval is there. So that's not a problem. The problem is that there is a land dispute going along there. And this is something that the state government officials will have to sort it out. If you look at any FDI, especially Moody's referring to manufacturing sector, in the manufacturing sector, any FDI that's coming, the operational role is that of the state government. And in the state government, it's a mix. I mean, it's difficult to say that it's higher bureaucracy or lower bureaucracy. Essentially, what happens is at the state government, there is a complex interplay of the local level officials, the local level politicians, working sometimes along with, sometimes against the state government's initial plans. And that is where the biggest challenges of FDI lie. For instance, states like Tamil Nadu or Karnataka, which managed to get a lot of investments, foreign investments into place, have been able to resolve this challenge by aligning their bureaucracy. So therefore, investors find no surprises on the way, even if a political party changes. Whereas there are states where we obviously know that the investments don't go. And the reasons precisely is because there the state is not aligned, or rather all elements of the state are not aligned to what is the investment requirement. This is the biggest challenge of bureaucracy. Now, so say that the bureaucracy is a problem is, yes, I agree. The bureaucracy at the center, for instance, if today, based on this, the central government or any other element of it tries to be further proactive, my sense is that that will not yield to a substantial change on the ground. The substantial change in the ground comes from state level. Look at the other example. In Andhra Pradesh, for instance, there was a huge investment plan that was created by Singapore to develop Amaravati. Now, did the center oppose it? No. It was the complex interplay of political risks and rewards in the state, along with their respective bureaucracies, which created the problem. And we have, therefore, a huge investment which never came to light. In Uttar Pradesh, for instance, the changes that we are seeing, positive changes that's happening, is because of the fact that the state level bureaucracy is for the first time aligning itself with what the state political structure wants, the power reforms. So all of these happen at the state level. At the central level, there is frankly very little, and I will again say that can be done because all of the processes that's necessary to bring foreign investment into the country at the central level, which needs central approval, where the central government can be a catalyst, are all very much in place and compare with the best of the rest of the world in terms of best practices. However, still, while there are objections to FDI coming in, that happens, as I said, at the operational, and that is where the big challenge lies. Yeah, over to you.
I want to dip into another interesting story that's also emerging at this point in time, and that is with respect to FDIs. Now, the gross foreign direct investment into India has declined 16.3% year on year in financial year 23. This is according to RBI's latest monthly bulletin that is coming in. It was at $84.8 billion in financial year 22, came in at $71 billion this year. Now, net FDI declined to $28 billion in 22-23 as compared to $38.6 billion a year ago. So, net, there has been a decline in FDI by as much as 16.3%. And I want to bring you in, Subhomoy, because this is in regards to what we were just discussing, that while centre is not going to oppose FDIs coming into states and very lucrative, deals that are signed every time we see a state coming up with a mega investment campaign of sorts. But many of these investment promises never see the light of the day.
But true. And that's exactly where the problem comes along. Of course, to put the numbers in perspective, then the slowdown is basically a follow-through of the 2 years of the global weaknesses that happened. So in 2020, the numbers that were high was basically reflecting the buoyant investment climate up till 2019, which showed up in the figures for 2020. Also, a large deal that happened for Reliance. In subsequent years, in 2022, as you are seeing the numbers now, this number has gone down because the essential flow of investment across the world has definitely slowed up. So India is one of the largest, but definitely it has also taken in the shock of the weakness that's happening. As you find the world economy growing after 2024, after 2023, then you would find these numbers again rising up. So as long as the global recession stays on, for instance, there's the uncertainty created this year tripled by the Russia-Ukraine war, by the supply shock impact of China, and now the debt crisis that's happening in USA. All of these will lead to very skittishness of foreign investments being committed to what is called the emerging markets. Okay. So if there's an emerging market to be invested in, yes, it will certainly be, as you were discussing, it definitely will be, one of the strongest contender will be India, but whether the money at all will be put in will depend on factors which are beyond India's horizon. So that's about the overall numbers. But I fully take on board, and that's what we are discussing, that creating problems at the state level is something that we are to really sort through. And in fact, these numbers, one of the major impact of these numbers is it sort of focuses our mind. It tells the policy planners that, look, the world is in a difficult state. Growth isn't happening naturally. India is in a good sweet spot because of the reforms that have been happening. It's not like something that is India's rover, that India will get it because India is India. Because India has been doing all the right things, so therefore the money had been coming. But if we decide to blow it up by, putting in obstacles, by not clearing clearances fast, then obviously that money will also become extremely nervous. Emerging markets like Vietnam, emerging markets like Indonesia are also competing for the money. And if they can present a better case, then obviously the money will flow there. So therefore, it's very necessary. I take on board the caution that has been expressed in the Moody's report, and so on in lots of other reports that keep on coming out, that the clearances need to be fast. Okay. However, having said that, if you could permit me 1 minute more, clearances in India are not that easy to do because of lots of factors that come. And that's something that we can discuss sometime later, either now or whenever you are.
All right. Yuvika, do you agree with that assessment? Clearances need to be faster. That, of course, is one of the reasons. What many are also calling high inflation, weak demand in US, Europe for low FDI inflows into India. Another reason. What would you attribute this trend to? Because remember, India bucked the trend even in 2020 when, all over, economies were not doing really well. We still saw a subsequent and a significant inflow of FDI. But at this point in time, when we are well over, the COVID peak, what would you attribute this trend to? Yuvika?
Sorry, Shweta, I missed the last 10 seconds of your commentary.
Yes, I was hoping you could perhaps enumerate on what would you attribute this trend to, because we've bucked the trend at the peak of COVID, we've bucked the trend in 2022. What Subhomoy said, that clearances need to be faster. Many are saying it's because of low and high inflation and low demand in US and Europe that is driving low FDI inflows in India.
Absolutely, Shweta. So I think last year was a very difficult year globally. And just to re-jog our memory, we started with the overhang of COVID. Soon thereafter, it was the Ukraine-Russia crisis, commodity prices shot through the roof. And thereafter, we realized that inflation that global key central banks had expected to be transient was not so transient, which saw aggressive rate tightening and thereafter the tightening of financial conditions which followed. And by the end of the year, by the time we closed the year, we were talking about a likely recession that was to hit the global economy. So against such a global hostile environment, not only did global flows shrink, but obviously India's share also somewhere dipped. And that's how you should rationalize this number of net inflows of FDIs going as low as 28.6 billion, which is somewhat akin to the numbers that we saw in 2012, 2013. And mind you, again, that was a period when there was heightened global uncertainty because of the taper tantrums that we saw in that particular year. So somewhere when the global environment turns that hostile, it is bound to have an impact on India and the flows that India attracts, not just on the direct investment side, but even equity for that matter, or even from the venture capitalists, as far as we saw flows towards startup funding last year. All of these different aspects did see a shrink. However, I would like to draw your attention towards a policy uncertainty index that we work closely with. Now, this is a policy, a global index that has been constructed by 3 scholars by the name of Baker, Bloom, and Davis, associated with institutions very well reputed, such as Kellogg, Stanford, and Chicago, all 3 of them from 3 different institutes. And what they essentially do when they build this indicator, that is the index, they cull through different sentiment-based words from newspaper articles. So it's a crowdsourced method of constructing the index. And what we find is that there is a very high degree of correlation between this economic policy uncertainty index and the GDP growth. So there's almost a correlation of 70% at the global level. What this essentially means that if uncertainty at the global level is rising, your GDP is likely to fall down, and along with it, there will be monetary tightening or liquidity tightening, which is likely to have an impact on your flows. Now, coming to India, and that's where the interesting part comes in, we plotted the index, which is the Global Uncertainty Index for the world as well as India. And when we juxtapose these 2 series together, we find that India has managed to decouple itself fairly well from the global uncertainty and the rise in global uncertainty on a trend basis that we have seen over the last 7 to 8 years. And we have to keep in mind, it's not just last 2 years of COVID, but even when you go back, jog your memories before COVID, global uncertainty had risen because there was a lot of trade-related mayhem, protectionist policies coming in. So global uncertainty as such has been on an uptrend, at least up from 2015, 2016 onwards. That is well before the onset of COVID. And what India has managed to do is that it has been able to decouple itself from this uncertainty at the policy level. And to us, that becomes very important because that somewhere justifies the kind of flows that we've received on net basis on the FDI front. So from somewhere around on an average run rate of about 20 to 25 billion dollars, say between 2012 and 2016, India did manage to take this number close to 40 billion dollars. In fact, we peaked at 44 billion dollars in FY21. So we have benefited from the policy certainty environment that India has been able to offer. Having said so, yes, when global certainty tends to peak, and in times such as now, where we are seeing a lot of financial market uncertainty, also coupled with policy uncertainty, the impact will be felt on India, and we saw that in FY22 numbers, and probably getting prolonged somewhat in
Right.
FY23.
Yuvika, sorry to cut you short. I just want to quickly understand. So apart from economic certainty, policy certainty, and you mentioned something very interesting here by the way of that map, I want to understand what active measures did the government take to decouple itself from global uncertainty?
Right. So I think we have to see it in the context of the last 7 to 8 years. And it's not just the government. Even from RBI, we have seen a lot of push. Like I said, we have seen RBI adopt an inflation targeting regime, which has brought in a lot of certainty as far as inflation is concerned, credibility to the monetary policy. If we talk about the government, there is predictability as far as government policy is concerned. We have seen strong policy impetus in the form of tax reforms, GST, reduction in corporate taxes. I could name stuff like PLI policy getting a very strong push, and this is across a gamut of sectors, 13 sunrise sectors that have been identified. A policy push has been created for them to attract global investors. Even during the pandemic, we strongly believe that we did not let go on our fiscal profligacy. So we were somewhere conscious, and we did not exhaust our entire fiscal power. So whereas a lot of developed countries did go all out and exhaust their fiscal ammunition, India was somewhere curtailed. We did provide support, but we did not go overboard. We kept it as a policy tool that could be deployed later, and we have seen the fiscal deficit now on its correction path. And in addition to this, we have seen reforms across the spectrum. So like I said, inflation, there's a lot of rule-based methodology. Ease of doing business is something that has also been adapted with very closely. Reduction in reforms, for example, forms that need to be filled in for exports and imports. So there's a lot of regulatory related improvement in the way in which India is doing business now. And one thing I would want to also add, that from a macro perspective, despite the global economy and India included seeing a sharp decline in growth in the COVID years, but even then thereafter, if we were to look at India's growth from a 3-year time span or on a trend basis, we do find that India was probably even during the COVID years one of the least impacted economies, or at least the wherewithal of the Indian economy was much higher than other developed or developing economies. And within this, one strong support pillar that supported growth and the recovery in growth was the durability to growth that the government's capex cycle offered. And we have seen a very strong capex push of the fiscal policy in the last 2 to 3 years. And this was rightly brought in at a time when the private sector was somewhat limping and grappling with COVID-related structural changes in the economy. But the government took the baton to provide that durability to growth and provide that strong cushion to growth. And we are seeing the recovery that we are seeing given its support.
Okay. Let me go to Subhomoy before we end this bulletin. Subhomoy, what do you make of this trend? Are we to read too much into it? Do you think we are going to be on the path of higher FDI inflows very, very soon? 16% decline is significant, but I don't see that affecting, larger investment sentiments.
Yeah, you're absolutely right, because if you look at the decline, you also have to compare it to the fact that what has been the decline in other comparable geographies.
Right.
So then you realize that actually it's nothing out of the blue, that money is going to rest of the places, whereas it's not coming into India. The criticism that many agencies like Moody's are making about the fact that Indian decisions on critical economic issues often tend to be slow is therefore a valid point and goes irrespective of whether the annual FDI flows are there. And that's something that is a larger challenge which we have to handle. As you would have noticed, as I said, that most of the states, it is there where the most of the attention should be paid. Central government is not the place where FDI attractiveness and others will be decided. When investors from abroad, when they come, they talk with the state governments, and how the state governments react, how well they follow through on policies is what will impact. For instance, let's look at Karnataka. Now, Karnataka, again, there's been change in the government. But as long as Karnataka will ensure that the policies for attracting investment continues, then that's fine. That is exactly what the investors want to understand. So these are very critical elements of the reform package. Bureaucracy takes up its cue from the what the political establishment is saying, and the political establishment tends to look for longer term movement, basically being stable over what they say on investment. Then that's good. That is what will aid reforms in decision making. Bureaucracy is just as to know is bureaucracy is like a reflected light.
Right.
It reflects what the political structure has to say. So the political structure has to be consistent in their decision-making process, wherever in whichever states that's been happening. It's not surprised that in those states investors come in huge numbers, whereas the shun states where despite big promises, things tend to change very fast.
Yeah. Okay. So is it your assessment then that things will change very fast here?
No, I wouldn't. I mean, as I said, in the southern Indian states, in the western Indian states, there is a very welcome tendency to take a long-term view on what is to be done. Of course, there are wrinkles. As I said, the bullet train project got into trouble. The Ratnagiri refinery has been having trouble, but more or less it tends to be stable in those states. The more we encourage those sort of steps, the more we also allow factor reforms, which is labor and of land, to happen, investments will keep on moving. Again, as I said, that those are some things which the political structure has to take a call on. The bureaucracy can do very little in those circumstances at the state level. Yeah.
All right, Subhomoy. So there has to be more political will in order to drive business sentiment. That is the message coming in there. Subhomoy Bhattacharjee, Yuvika Singhal, thanks very much for joining with your inputs on that story. And moving on to another very important story that we're tracking here. As per a Bloomberg report, cough syrup medicine imported from India was the cause of kidney failure that killed as many as 60 children in West African nation of Gambia last year. Now, the report was submitted to the Gambian Health Ministry earlier, has not been made public, but Bloomberg says it has seen the report. Now, although Indian authorities continue to deny the products were contaminated, the government this week imposed a new regulation that requires cough syrup to be tested by a government lab before it can be exported abroad. News is also coming in from the US at this point in time, where an Indian manufacturer of eye drops has been linked to 3 deaths and serious infections. The eye drops were made by Indian firm Global Pharma. The firm recalled the drops in February after a recommendation from the FDA. Serious allegations there on at least 2 pharmaceutical companies at this point in time. Now, this is a report, remember, that has not been made public. This is a Bloomberg report. Bloomberg says that it has seen the Gambian Health Ministry's internal report, which will be hopefully be made public for public consumption later. But almost 60 children died in the West African nation of Gambia last year owing to a dangerously contaminated cough syrup. My colleagues are joining me at this point in time. In fact, my colleague is here. Jeelani, I want to come to you directly. This is an important discussion. You've been tracking the developments in the pharmaceutical space, especially with respect to the cough syrup. What exactly has happened so far? Run us through the timeline.
Okay, thank you, Shweta. So, at the core of this issue is these 2 countries which have flagged Indian made cough syrups. One is Gambia, where you rightly said 60-65 kids died, and then is Uzbekistan, where 15-20 kids died. In both the cases, the allegation is that these cough syrups were exported from India, manufactured in India and exported then used there. So, what the government has done now, so there have been responses from the government after these 2 incidents, but now what the government has done, it has imposed another set of regulatory mechanism for these drugs that are exported from India. So, every export every drug that has to, every cough syrup that
In
has
fact,
to be.
Jilani, I will come to that. I will
Okay.
come to the new regulation.
Okay.
I want to first understand the core of the crux of the issue. And so, from what you just said, 65 children died in Gambia and
Gambia.
Uzbekistan
Yeah.
owing to one single pharma company.
Yeah, that is Made in Pharma, which is in Noida,
Okay.
and apparently that pharma company has been shut now. And there was another episode wherein 16 kids died in Uzbekistan. That company was based somewhere in Haryana. So these are
So,
not
two separate companies,
companies,
but both making cough syrups.
cough syrups, and two separate cases, two separate countries. So a bit of background here. You know, India is often referred to as pharmacy of the world, and the selling point of India is the huge volumes that we manufacture. And another point is the cost effective. Drugs are manufactured cheaper in India than in any other country, and these drugs are exported. We have about $40 to $45 billion export industry of drugs, and these two drugs go to countries in Africa and also to developed nations like USA and other countries in Europe. Okay. So there are two kinds of manufacturing that happens. One is the drug that goes to US and Europe. So these are, you know, state of the art companies. These are highly regulated companies, and one good thing about these companies is that inspectors come from US and Europe. They first inspect the drugs and then they are exported to US and Europe. In the another set of companies, or what do you say, these factories, so these cater to domestic requirements and also to African nations like Gambia and Uzbekistan or other countries which are not developed countries. So that is where the problem lies. So it all started, we remember in 2008 there was this huge controversy over Rambaxi. So India, considering the fact that it exports around $40–45 billion drugs, there have been concerns over quality since then. And this episode that happened in over the past 2–3 months has obviously, you know, come with a beating for the image of India as pharmacy of the world. And I think as pharmacy of the world, it's our responsibility to ensure that quality is not compromised.
Okay. You know, something interesting you mentioned there, you said if every time a drug is exported to US, there are proper quality checks. But interesting story coming in there, also from US, attributing a eye drop which has been made in Chennai, which has caused deaths, 3 deaths, serious eye infections in more than 10 people in the US. We also have Dr. J.A. Jayalal, former national president of IMA, joining us at this point in time. Dr. Jayalal, thanks very much for taking time out. I want to ask you, what do you make of these news reports that are coming in from US at this point in time before I go to what happened in Gambia? This is fresh. This says that an Indian manufacturer manufacturing in Chennai in a plant goes by the name of Global Pharma is responsible or has been linked to 3 deaths and serious infections.
Yeah, first of all, it is a real setback for India as it is a pharmacy of the world, and we are exporting nearly $40 million worth of pharmacy drugs. But many times these complaints and these reports which are coming out are not on a full fledged. There is not the full truth of that. Way back in 2008, when the New Delhi bug infection, that is super bug, was put, there was one person from the Swedish, he has got a infection from India, and when bacteria was identified, they immediately, in their fraternity, they given a name, it's a New Delhi virus, New Delhi bacteria. Then many of us raised the questions on that, and slowly that name has been taken, because now for many things there is a linkage is given to Indian origin or Indian production. Even in Gambia, I being the Commonwealth Medical Association secretary also, after the report, we had an investigative report in Gambia. In all these students, I mean, though these are the cough syrup, the cause of death was their dehydration. They were extensively having diarrhea. That diarrheal disease has caused to the death. That was a report which is coming out from their Gambian state. But it has been projected that it is a cough syrup. Yes, our cough syrups, diethyl glycol was the content, it was little excess, and that may be the reason. But 1 + 1 need not be always true. Second concern for our Indian Medical Association, the government of India always act in a knee-jerk reaction. When something comes, they immediately put a rule. And another thing comes, they put a rule. But they do not make a comprehensive rule, comprehensive way. For this, the reason is we don't have adequate manpower in the system of our drug control infection. Then we don't have a system to where we are going to do. For this company, now the US is talking about this Hydra, the team has come down, they have checked, they have found the doors in the manufacturing unit, the utensils they are used in the manufacturing unit is not clean. This is the report is given by the FDA. They say that when they are doing an inspection, it is not the drug. And so that makes our infrastructure and comprehensive system, we are not able to make. Our appeal is the government should make a comprehensive policy, not making a knee-jerk policies, and to make sure our name is not distorted. And the reports coming from international things has to be taken with a pinch of salt, and we need to do our quite introspection and come out with the actual values on that.
Okay. Okay, interesting take there. Reports coming in have to be taken with a pinch of salt, but this is an important report. We will, of course, keep tracking developments on that story. Gulam Jeelani, Dr. J.A. Jalal, thanks very much for joining with your inputs on that very, very important story. Shifting focus now to Goafest 2023, India's largest advertising festival has kick-started in Goa. News9 Live team is present in Goafest at the moment to bring you all the action that's happening at the event. My colleague Krishnakumar joining me from Goa at this point in time. What's buzzing right there right now, Krishna?
Right, it is a very momentous occasion for the Goa Fest, the biggest advertising fraternity, shebang possible, in the country. The Goa Fest turns 16 this year. It's a sweet 16 for the Goa Fest, 16th year of Goa Fest. And also, as part of the Goa Fest, there's the Abbey Awards for the best advertising campaigns, and it is in its 54th year. So this is an event that's been going on for decades. It has a long association with the Indian advertising and media fraternity. And we here at News9 are present right there on opening day. It has just kick-started. The famous singer Kanika Kapoor, in fact, kick-started the proceedings. In fact, there was a champagne opening before that, but after that, there was Kanika Kapoor's performance. Famous songs like Baby Doll and, Chittiya Kalaya, all that was performed. So Kanika Kapoor set the tone for Goa Fest 2023. And bear in mind, for Goa Fest 2023, we have some big international advertising agencies who have come back for Goa Fest 2023 this particular year. We're talking about McCann, Wunderman Thompson, Low Lintas. Some of the biggest global advertising agencies are back at Goa Fest, so it is fully packed this time around. It also has a very star-studded lineup. Kanika Kapoor was just the beginning of the whole thing. You also have YouTube sensation star stand-up comedian who was felicitated by the Prime Minister of the country, PM Modi. Ayo Shraddha performing at the Goa Fest as well. That's going to be quite a riot. We also have some other big high-profile names from the movie fraternity. We have actors Rana Daggubati and also Tabu who are going to be here as panelists for Goa Fest 2023. So it's a star-studded lineup. Apart from advertising fraternity and media fraternity, we have actors and also cricketer Harbhajan Singh is also going to be here. He's also going to be a panelist on one of the sessions over here. A 3-day festival that has just kicked off. It's going for the next 72 hours. It's going to be absolutely packed with exciting panel discussions and performances. And more importantly, this is the place. Goa Fest is the place where the media and advertising fraternity of India comes together to have a conversation which they wouldn't have on a normal work-a-day basis. So this is where important conversations are had for the future, and it has gotten off to a rollicking start here, Shweta.
Lovely, good to hear that. I envy you, Krishna. I hope you have a great time in Goa and keep bringing us all those details that are emerging from the Goa Festival. We're going to shift focus now. Dalal Street, and it was a volatile session in the markets today. We're given to understand that Indian markets ended in lower. Joining me at this point in time is my colleague Suyash. Suyash, what's the update?
So Indian markets, it was a volatile session for the Indian markets after opening in the green and trading up till the afternoon session. Indian markets succumbed to profit booking and snapped its 3-day winning streak amid selling in financial and metal counters. Now at close, Sensex was down about 0.34% to close at 61,773 levels, while Nifty fell 0.34% to close at 18,285 mark. Among individual stocks, Sun Pharma was a top gainer in the Nifty pack today with gains of over 2%. Dr. Reddy's Lab, Hero MotoCorp, ITC and IndusInd Bank also surged around 1%. Now on the other side, Adani Twins, after a 3-day rally, were the top losers today in the Nifty pack. Adani Enterprise was down over 6%, while Adani Ports fell about 2%. Now Tata Motors, ICICI Banks, HDFC Bank were also some of the biggest laggards in today's session with losses of about 1%. Now the broader markets outperformed the benchmarks with Nifty Small Cap 100 ending flat with a positive closing of about 0.01%. Meanwhile, Nifty Mid Cap ended with gains of about 0.21%.
Shifting focus to sectoral indices, Nifty Pharma, Nifty Consumer Durables were the top gainers today, each with gains of about 1%. Nifty Media and Nifty Healthcare also posted decent and strong gains today. On the other side, Nifty Metals was the biggest loser with losses of about 1%, and banking and financial stocks, which have been under pressure lately, also were also ended with losses of about 0.5% in today's session.
Okay, so Adani stocks there in particular have snapped their losing. Some correction there, some profit booking, and then hopefully we'll have to wait and watch out for what happens tomorrow. But important updates coming in there from the stock market at this point in time. Suyash, appreciate you joining with the details, important details there on that interesting story. And with that, it's the end of this bulletin on Business Plus. Keep watching News9.